Hi everyone, I'm Chad Shoop, the editor of Automatic Profits Alert, and today we're going to talk about earnings. When you look at the second quarter, which is the earnings season that we are almost done with right now, the companies in the S&P 500, the results were fantastic, and it's pretty much over with, so we can look at it as a whole at this point, and earnings growth for the quarter was 25%, which is phenomenal. This is the best growth rate since the third quarter of 2010. And over 3/4 of the companies were beating on earnings expectations. So they're topping analyst expectations for what earnings would be. And almost 3/4 of the companies also beat on revenue expectations. So this is sales. This is top line. Now we could have expected the bottom line beats because of tax cuts for corporations. And we're seeing that hit the bottom line. And they're able to outperform what analysts were expecting. But top of the line, sales, that's consumers, that's businesses, that's our economy going on right there. And that's beating expectations as well. So the question now is, will it continue into the third quarter? And I think we're going to see robust growth for these companies in the third quarter. And I think we're going to see solid results as well. So I don't think it's anything to panic about. But I want you to be ready for some volatility. And that's because what we saw in the second quarter, where all these analysts were undershooting expectations by about 75% of the time, 3/4 of the time. Now they're keeping their expectations pretty high. Because what we saw in the second quarter with their guidance was that more companies than average were lowering their guidance for the rest of the year. So that's fine. They're taming expectations a little bit, and they're still positive, but they're just ratcheting them back from what they were seeing earlier this year. Now, what analysts are doing, though, is keeping their forward expectations for earnings still at high levels. So they're not adjusting lower. On average, they had fewer adjustments lower. So we're seeing a divergence between what analysts are doing and what the company is saying. And I think that's going to really take effect here in the third quarter when that earnings season begins in the coming weeks. We're going to see companies that report still solid fundamental earnings that look great. Revenues are looking great. These are still solid companies and they're doing well. So it's nothing to panic about. But their stocks could sell off a little bit, and that's going to create some volatility. And overall, it could lead to another pullback here in the fall for the S&P 500. So I just want you to be ready for that. But I don't want you to panic right now. We're going to use this opportunity to buy the dip, to buy on the pullback, because right now our economy is still looking great, and we don't want to exit. We don't want to be panicked because there's some volatility here after the correction. What I think we're going to see is the stocks are still going to run up here for the next several weeks, and then we're going to go through this pullback when we're in the middle of earnings season, and that's going to be an excellent buying opportunity, and it's going to be a great time to jump back into the market if you were out, or to add more stock, to add more funds into the market, or you can utilize a strategy like I do in Pure Income, which is sell put options, and we take advantage of increased volatility to collect more income on our end. So there's going to be many different strategies that you can apply to take advantage of this pullback. And right now, the main thing I want to get across is just not to panic. Use it as an opportunity and use it to stay invested because this bull market is not over yet. Well, that's all for my video today. If you enjoyed it, be sure to subscribe to our page and continue following us. Until next time, this is Chad Shoop with Automatic Profits Alert.